Token Metrics is a cryptocurrency investment platform that helps users leverage machine learning to become better crypto investors. Our in-depth analysis helps eliminate the emotions of investing, find profitable investment opportunities, and filters out scams. Learn more at tokenmetrics.com.
We are live. This is the market update. Which market update? The only market update that gives it to you straight. I'm your host, Bill Noble. This show is brought to you by tokenmetrics.com, the only honest place to get research in this market. If you need a roadmap in crypto and you've been listening to the wrong people, the good news, you're listening to the right one. Subscribe to this channel. Turn on the alerts bell so you know when we're going live. And if it's helpful, please drop a like. Trying to break our record of 1,200 likes. 2,000 likes is next. All right. So we appreciate all you out there. And we welcome our new viewers. Okay. So we have Ali from London first on the stream. Jojo, welcome. Right. Doc hits the like button. Bubba, good afternoon. We have East Tennessee, right? Nathan, Tybor, welcome. Bull Runner is here. Long time viewer. Fernando, John Smith is here, right? Poland, Montreal for F1. Driftless is here. Nashville, Stockton, California, right? Looks like we have Germany, right? Somebody getting some gratitude going for getting some help with this crazy market, right? Oxford, UK in a heat wave. Shreko says LFG 2018 lows. All right. Don't disagree. Greetings from Ecuador. Okay. Charlotte, Amsterdam, right? Appreciate the love out there from Dennis. Thank you. Tel Aviv, Middle East. Bali is here. Little people, people joining on vacation. North Carolina, Peru, right? How do you like them apples from Chicago, right? You like apples? How do you like them apples? We're going to get a little apples going today. We're actually going to read out of the 1929 crash book. So absolutely, positively do not go anywhere because, man, you're not going to believe some of the things that I found in this book to read to you today. So it's market update, it's news, right? And it's the 1929 fireside chat with a wicked Gann twist, right? And two charts from Token Metrics that will blow your mind. They will blow your mind. So don't go anywhere. Brooklyn, Maryland, South Carolina. Paco does not like the fact that I'm wearing a red shirt. Scary, right? Vegas is here. What's up? DC, Missouri, Brazil. Bill Gates shorting Tesla. You know what? If that's the case, that may be the smartest thing that guy's done yet. Him trashing crypto, we'll get to that. Okay. Japan bonds. All right. We can check that out. Pakistan, right? Arizona, it's 106. Man, it was 106 for consensus. That was just like, it was like in a pizza oven. Copenhagen is here. Token Metrics family, Halifax, UK. Is this the exit pump? Emmanuel wants to know, are we going to zero? Well, there's support at zero, but I think it's going to stop short of that. But I like the way you're thinking. Okay, tell us what's going to happen. Working on it. Don't worry. Don't go anywhere. 75 basis point hike in Canada. We have Guatemala, Orlando, Minnesota, right? We have Virginia, Atlanta, Georgia, upstate New York. Okay, everybody's here. Now, let's go through some crypto news. Okay, crypto news. What's going on in the world? Bill Gates says crypto and NFTs are a sham. Gee, Bill, Where was that call when Bitcoin was at, I don't know, 60, 40, 30? These guys. NFTs are a sham. That's funny. Funny how NFTs will populate the metaverse, which Microsoft bought Activision, right? And a lot of the 3D animation talent. So, of course, Bill's going to come in and talk crypto down and talk his book because he wants to own the metaverse, right? Makes me want to take my Windows PC and throw it into effing traffic when I listen to this guy, right? First, he's a pandemic expert. Now he's giving crypto financial advice. We know where the good place is to get crypto financial advice, or not financial advice. You know what I'm saying? It's definitely not this creep. Definitely not this creep. Speaking of creeps, okay, the Celsius Vault, right? They're adding to it. So they heard that my target was 14K for the Head and Shoulders top, right? So they moved their liquidation point down to 14K. Too bad it's going to 10, and these guys are going to get liquidated. Good riddance. Okay? It's going to happen. And it probably could happen sooner rather than later. Okay? Especially if they can't take the market back up today. All right? Well, so Circle, get ready for EuroCoin. EuroCoin is the newest stablecoin that will launch on June 30th. You know, does this not reek of like the dumbest thing ever? So USDC is probably the most decent stablecoin out there, assuming that, you know, the Fed or the Treasury doesn't come in and say, you know, enough of this stablecoin horse shit. We're the ones in control of the dollar. All right. But USDC is okay. No need to panic. But I've been going on and on and on the show about the European Central Bank and the little problem that they've got where they have trillions in bonds on their balance sheet and hundreds of billions of dollars, if not $1 trillion in losses on those positions as interest rates spiral out of control, and the euro plummets in value or will plummet in value. Either way, the European Central Bank could be the final blow up in November. How exactly would that work? I don't know. But a month and a half ago, I said there was something out there, and there is, right? Celsius, 3 Hours Capital, all these guys who are just going to get vaporized. I have no idea why Circle would want to get involved with the euro, right, when there's a problem with the European Central Bank. Now, Circle probably doesn't know that there's a problem with the European Central Bank, and neither do I. But they're not looking at the price action of European bonds. Now, I understand they want to get involved in the stablecoin market. So, I mean, from a business marketing decision, you know, it makes sense because, you know, nobody wants to use other people's stablecoins. They kind of own the brand. So I understand it at a corporate, like micro level. But from a macro level, this is stupid. I'm sorry. It's stupid. Okay, let's talk about 3 Arrows Capital. So, in my opinion, these guys are the Lehman Brothers of this move. Meaning 3 Arrows Capital has a problem. We know they have a problem. We suspect that they're insolvent. And we don't know. This is the Lehman thing from 2008. We don't know what them blowing up or them getting liquidated will do to the system. Remember, Lehman was bankrupt 2 or 3 weeks before everyone figured out, oh my God, we have to sell S&P. And people didn't get it. It was like, okay, this investment bank vaporized. What does that mean? Okay, well, it ain't going to take 3 weeks in crypto. It may take 3 days. Okay. But, you know, I thought we had 3 days yesterday. They rallied it, right? And I was like, okay, they rallied it. And I went to bed. I was like, all right, we'll wake up today and probably be bearish. And then it's down 10% in my face. It's like, Jesus, right? So we don't know what this means. We know what it means, but we don't know when it's going to mean it. I suspect sooner rather than later. Why? Okay, well, let's lead this thread, right? So this guy has money inside 3 Arrows Capital. Okay. And if you go down here to the bottom of the thread, okay, what he's learned is 3 Arrows Capital was leveraged long everywhere, and they were getting margin called. Instead of answering the margin called, they ghosted everybody. The platforms had no choice but to liquidate their positions, causing the market to dump further. So on one hand, you could say it's over, right? Don't go anywhere after the 1929 book. It's over, right? They've all been liquidated, right? However, they still have assets on a number of platforms. You know who you are. So he's calling out the exchanges or the houses that have got these leveraged positions. We call on you to freeze their assets so that those who 3 Arrows Capital owes money can get paid back in the future after legal proceedings. So let me get this straight. You're going to freeze crypto assets? I mean, maybe if they're holding cash, maybe. How are you going to freeze crypto assets and prevent a further decline? Doesn't it make more sense for whoever's holding their positions, their crypto, to just liquidate it and get out? In other words, if this is both, oh, I blew up, and it's men behaving badly, okay, and now how is it men behaving badly? Well, for the most part, they aren't speculating with clients' money like Celsius, okay? However, they did use our funds to answer their margin call. So let's get this straight. They had massive leverage, okay? They were involved in all kinds of stuff like staked ETH. We've talked about that, right? About how, staking your ETH and getting like monopoly money ETH in return, and then using that to get like double leveraged. I suspect that's what they were doing. So they're getting double leveraged. And then when they get margin called, they're using other people's money to pay the margin calls. That's a Ponzi scheme. That's blow up and fraud at the same time. And this guy's calling for some sort of legal solution, which, he may get. All right. This guy concludes losing a bet is one thing, but at least be honorable and do not drag others into your bets who have nothing to do with it. Certainly don't ghost everyone, since potentially they could have helped you. Essentially, he's saying panic is involved. Ghosting people is involved. 3 Arrows Capital head deleted his Instagram account. So you have liquidations, fraud, and panic all at the same time. So these guys have to sell. Celsius has to sell. Musk has to sell. Saylor has to sell, right? And then what these guys are going to do is they're going to use 20K. So everyone's going to bid 20K, right? Today, over the weekend, I don't know. They're going to use 20K. And everyone's going to stand there and bid, and retail's going to bid at 20 or 19. And then these guys and all of these short sellers out there are going to fill all those bids to crack the market, right? Now, you're going to start seeing volume coming in. Now, as we complete the news, here is some 1929 trivia, right? So we're going to read out of the 1929 book, so don't go anywhere. But here's a little Gann work for you. So according to the 1929 book, the crash officially started on October 24th, 1929. According to Siri on my phone, just for laughs, that's 33,838 days ago. Okay. Now, if you take that number, just for laughs, right? Just working some Gann mathematics, I divided it by 7. And it turns out it comes out to an even number. I mean, think fast. How many numbers do you know that are divisible by 7 easily? Yeah, what? 21, 49, 70, That's it, right? I mean, that's not it, but that's what's easily visible. So we have the days since a mega crash divisible by 7. Why is 7 important? Okay. 7 is the fatal number, according to Gann. Okay. Basically, it brings contractions, depressions, and panics. Right. Now, there's a whole history of the number 7. It appears throughout all kinds of scriptures, places. We don't need to go into that. All I know is it's not an accident that Gann work has been working. Okay. And the number of days between the start of the last crash and the start of this one is divisible by the ominous number 7, which is why we're calling today's market update the 7th sign. Okay. So if y'all think I was freaking you out with the red shirt, now I'm really going to start freaking you out. Whoops. That is an additional news item. Let me see if I can get to my PowerPoint. Hang on. Don't go anywhere because we will be talking. We will be talking about not only the 1929 book, because it's time to start reading out of it. I've been saving that for a reason. Okay, here is your market update, the 7th sign. So, some brief news. Former president at the New York Stock Exchange joins Uniswap as an advisor. Well, Uniswap's token has support at 0. It will probably be the infrastructure of DeFi when they figure out how to rebuild it. And most importantly, you'll be out of the New York Stock Exchange when Monkey Market finally detonates. 71% of high net worth individuals have invested in digital assets, according to a consulting company. That's great, but they've bought the wrong digital assets. They bought Bitcoin, and that's not the future of crypto, right? The future of crypto is probably like metaverse and privacy, so you can transact in the metaverse. So as usual, when people do the first trade, it's the wrong trade. Metaverse could be worth $5 trillion by 2030, according to McKinsey. Of course, right? The digital land in the digital world, given what's going on in the real world, right? Like, this crap on dating apps. You swipe right, you chat. Then you go to text. Then you do a phone call. Then you do a coffee date. Then you do an actual date. I mean, it feels like I'm interviewing for a job at Goldman Sachs. I mean, why can't we just hit the button and go directly to a metaverse date? Right? Why not? Why can't we shop in the metaverse? What? When the internet first started e-commerce, people said, I will never stick my credit card into the internet. I will never type it in. That's what people said. So metaverse is not going anywhere. If anything, metaverse is going to get cheaper, right, on this calamity, and you'll be able to hoover up the currencies that you're going to need to get involved in the metaverse. So like regular people can get involved. Cryptocurrency can be used in cross-border or international transactions if they don't get into the Russian domestic financial system. Okay. So 1 minute we like crypto, 1 minute we don't like crypto. The Russian government, in my mind, is bad news. Okay. So whatever they say, just do and believe the opposite. Kazakhstan to let crypto exchanges open bank accounts. What an excellent idea, honestly, right? Because anybody who can get access to crypto after this blow up is going to benefit, right? Blow ups hurt the rich, but they really help the poor because they can get involved in real quantities. This is, of course, assuming they can get liquidity. Now, let's talk about stonks, okay? So yesterday, the Fed did 75 basis points, and no one cares because they're going to have to do a lot more. We don't know how much. But of course, equities go up because equities always go up because, I don't know, they figure out a way to rationalize whatever. And then jobless claims numbers come out today and confirm what we already know. Like, people at low incomes may be driving their cars less, but I was in a full restaurant last night and the employment numbers show that people are still hiring. So yeah, Coinbase had to lay people off, but you know, the economy is still functioning because equities haven't gone down, right? So Powell has to somehow figure out how to get equities down, or he just has to let it happen on its own. You're not going to have lower inflation until stonks blow up. It's simple as that. So we have some hidden pivot work here. 37.36 was a level. The alligator moving averages are opening up, which means downside momentum has started or is picking up. And, you know, S&P could be 7% lower, right? There's that old saying about July 4th, don't go long into a long weekend. You know, nobody is going to go long. Nobody is going to be long or unhedged in equities headed in to either Father's Day, which is this weekend, or July 4th. Like, if I was in equities, I'd be just like, okay, sell what we can, hedge what we can. I'm not dealing with this because I know it's going to blow up. And it is going to blow up. It needs to. Tesla, speaking of blowing up, Elon Musk, okay, buying Twitter, buying Bitcoin, being super popular. I get it. I like the guy. But this Tesla chart is a disaster, I think, right? It's tough to see, but, you know, they had a level around 677. And of course, as is the case in stonks, they have to run the stops at the level, naturally. They run the stops after the Fed and then drop it the next day below the level. I can definitely see Tesla at 319. These guys own Bitcoin, and no one is focusing on what happens if everybody gets liquidated all at once. You want to hear a little story about that? Don't go anywhere. Okay? Everybody gets liquidated all at once. There's nothing wrong with crypto. There's nothing wrong with crypto. Just everybody gets liquidated all at once. You'll have a June, July. You'll have a September, October, and then we'll be done. But this could happen all at once. And everyone knows it. And everyone's probably afraid to be short. No one wants to be short Tesla, which is why you should be. Because bear markets get really twisted, right? Like yesterday, the market went up. You're like, okay, the market went up. I have a day off. We can chill out. Tesla's not breaking down. You walk in this morning, boom, down. Like this whole don't turn your back on the bear thing gets more complicated now. It's harder. And as it continues to go down, it's going to get even harder, which is why I think sounding the alarm again about what can happen here. Like people like, Bill, where's the victory lap? Like, dude, there's no victory. It hasn't happened yet. That's what that Gann calculation is telling you. This is the start of the crash, not the end of the crash. Okay, FANG, Web 2, Facebook, Apple, Netflix, Google, Microsoft, Gates, get ready to burn. Okay, Williams moving averages, the alligator's opening up just like it did in January. That's up here at the top. Just like it did in April. That's in the middle. And just like in June. So KYAB, right? Kiss your ass goodbye in Web 2. I'm so done with this. So done with these people, these stocks, these CEOs, these companies sucking all the talent out of our like scientific community. Please bury this thing. Rest in peace. Okay, let's go to ETH, Web 3. Okay, so if Web 3's got problems, like I said, Web 2, rest in peace. Okay, we have the alligator moving average opening up on the ETH 89-minute chart. Okay, that doesn't mean it goes straight down, but that means, I don't know, I think we're on a timer here. We got 1 to 2 days. I actually thought this might try to go up. So much for that. It may, it still may. But, I mean, this is like last chance, last rally, bars closing, okay? Alligator moving average resistance from hidden pivot at 1129. Okay, you could get a move to 997. Okay, and I actually think this is like an Elliott wave. Like, this is the ultimate three wave, right? This is the part where it literally just goes vertical. So if ETH is not, can't get above 1130, and I think the GAN level is 1170, like if it doesn't recover above that, like you're done seeing 1200. And I think if you saw 1200, that's where short sellers could start to have confidence. But I don't know. At this point, like when I'm reading out of the book, right? So don't go anywhere because we are going to read out of the book. It's 750, right? The thumbnail, I think, for this is ETH 750. It's going to go there. It'll bounce off 1,000, and then people will realize that Bitcoin is the one that's going to crater ETH. You know, it's been ETH leading the way down because of problems with staked ETH, and we don't know the extent of that problem yet. We still don't. We know there's a problem. We just don't know what it is. So again, that uncertainty is toxic, and that's probably why ETH can't get above 1130, at least as of June 16th, midday. Bitcoin, same deal, right? 89-minute chart, alligator moving average opening up, indicating downside momentum is starting. Okay. You know, hidden pivot resistance at 21,000, like 21,100. Okay. So nobody wants to be, you know, no one wants to be short at 20. And this is telling you should be. Now, there is support at 19K. There is support at 20. I don't want to be an idiot and tell you that, you know, 20 is not a level or meaningful support. It is, because it's a psychological number. However, our bigger players sitting in their offices going, guys, you know, we got to get out or we got to hedge. So if there's liquidity at 20, we have to use it. We have to use it because there isn't going to be any liquidity below 20. And everybody has to start liquidating at 14. So if we don't get out now, we may not be able to get out. It's as simple as that. And I've been talking about this, the idea that 20 and 19 could be liquidity levels, right? It's like last chance liquidity for guys who have to liquidate, exchanges that have to liquidate, you know, lenders, borrowers. We don't even know how big the maze is out there. We don't know. We know there's stuff on Twitter, but nobody knows the details. And by the time we know the details, Bitcoin's going to be at either 15 or 10. Like the short-term target's 15, right? But you could see 10 easily. Now, just as a point of information, on tokenmetrics.com market page, altcoin market cap is at 565 billion and Bitcoin market cap is at 421 billion. So let me get this straight. So back in April over here on the left, in 2021, you had altcoin market cap massively above Bitcoin. That created the top. So it's safe to say, I think, that since markets love symmetry, right, you're going to have altcoin market cap massively below Bitcoin market cap when this is over. And laughable, I think they actually upticked altcoin market cap yesterday on the squeeze, which is pretty funny because it's going to go in the opposite direction. So if I think Bitcoin is a doorstop, right, what the heck is going to happen to altcoins if the altcoin market cap has to be materially below the Bitcoin market cap? Which is why I'm coming up with, okay, yeah, 750 is a number, but so is 350. Because if Bitcoin's going to 10, 6, or 2, where are altcoins? Now you're like, Bill, that's ridiculous. Really? Is it? If everyone sells at the same time, is that ridiculous? Where's the liquidity for all these people to sell? Who's going to take it from them? Mutual funds, hedge funds, banks? Yeah, they'll eventually take it from them, but at what price, right? Who's the buyer on the way down? Okay, dollar yen. Now, I've been like dollar up, dollar up, dollar up. I'm like, all right, but dollar stopped going up versus the yen. Now, What have equities been feeding on? Talked about this like 3 streams ago. So dollar up, yen down, because the Bank of Japan has been flooding the market with yen. Well, it looks like the flood has stopped and the dollar stopped going up versus the yen. Now you're going to tell me dollar down means Bitcoin up. Not necessarily, because the euro is just as hosed as the yen, if not more. So the dollar index isn't going anywhere, but this shows that the sugar that equities have been maintaining their bid, there's going to be less sugar. If the yen is dropping, they don't have to print all that yen. So the second they stop printing yen, stonks vaporize. Okay, some simple math in Bitcoin, right? In 2021, Bitcoin went up. I'm sorry, in late 2020, Bitcoin went up $20,000 in 3 weeks. Now, this down move started at 30. And can somebody please tell me why this week and maybe next week, Bitcoin cannot just complete the down $20,000 reverse move? In other words, it went up 20,000 in 3 weeks. And someone's going to try and tell me it just can't turn around and go down 20,000 in 3 weeks. You know, you've heard, escalator up, elevator down. Elevator down, boom, right? So that could mean 10K. Okay. 10K. 30 minus 20 is 10. And everybody gets liquidated. When? Now. I mean, what? We got to wait until September to figure out that all these people who have to get out, like all these people who are forced to sell? I don't know. You tell me. Okay. Again, here's Celsius. You know, their liquidation point is now at 14. So they heard my analysis about the hidden pivot target at 15. So they moved their target to 14. Little do they know that this thing could just turn around and go to 10. Right? These guys can move their liquidation point wherever they want. They're going to get liquidated. Now, September, November, good luck. Right? Good luck. I interviewed their CEO, right? We let him have his say because people thought that he was involved with Luna. Right? So I've talked to this guy, right? He's not stupid. He's not stupid, but these guys are going to get liquidated. Okay. Now going to the layer ones. So, it really hasn't paid to be short the big layer ones for like, I don't know, almost 2 weeks, right? Because it'll go down and it'll go back. Right? It'll go down and it'll wick up, right? I mean, you had a squeeze yesterday, an avalanche from 15 to 18. It's brutal. However, now that they're done with stop and chop, there's hidden pivot resistance at 1645. Okay. And if they can't get this thing back above 1645, that alligator moving average is rolling over. And this Williams oscillator right here, this little arrow, man, when you get that thing at 0 like this, that has been money. That has been when the down moves have started. So they have been chopping everybody up to the point where, I don't know, I was like, you know what? I don't think I want to talk about this anymore because it's too choppy. And then I'm like, oh my God, wait a minute. That's the new turn your back on the bear, right? I'm tired. I don't want to do it. I'm stopped out. I need 3 days off. It's totally natural. You think it's easy talking about this kind of stuff? Forget about it. It's so hard, so draining. But don't worry, sheepdog in the house, right? This thing can't get above 1645. You're looking at 14, which was the old low, and you're probably looking at 10. And if there's no bid in Bitcoin or ETH, what is going to happen to this stuff, right? So to drive the point home, there's Fantom, right? So Fantom has support at 22 cents. I'm not hating on Fantom. If support holds, I sure hope so. Because you know what? If Fantom doesn't hold 22 cents on this AI-based log chart, right? So the AI for token metrics, the only place to get reliable research in up markets and down markets, okay? at 22 cents, if this doesn't hold, there's nobody home until 2 cents. Like this is, I did not draw these lines. A computer drew these lines. So if Fantom, which was like the hallmark of hot DeFi, breaks, that's it. Done. Like, it's not like something I made up. Speaking of something I didn't make up, let's talk about Bitcoin, right? And this is not the correlation matrix, so that's mislabeled up at the top. But what's not mislabeled is speed, magnitude, and direction. What goes up one way goes down the same way. This is like the more advanced version of up 20K in 3 weeks, down 20K in 3 weeks. Simple as that. Our AI first picked up on Bitcoin at 11K, right? So as you can see, this thing's rolling over and everyone's liquidation points are at 20, 18, 14. But if Bitcoin goes home to mama, it's 11K. That's where RA liked it for the first time. And the sell for token metrics is actually better now than ever. Because if you have a coin, you better know where the AI picked up on it, because that's probably the price target. The only thing that's going to work in technical analysis from this point out is going to be things that other people can't see, like AI-based support and resistance. The price targets on the downside. Well, where did our AI first like it? Like if you unwind the whole move from where our AI picked it up, where does it go? People are like, well, what about my coin? Well, I don't know. You got to get on here and look it up. You just type the symbol in, hit technical analysis, and this pops right up. Move your mouse to the green dot and you're in business. ETH. I put on my Twitter, crypto_noble, that ETH could go to 350. Sorry, it's 368. That was the original buy point from October of 2020. Okay, when me and Ian Bellina sat on the live stream from September of 2019 to September of 2020, pounding the table that ETH was the bigger the base, the higher in the space, and there was no way ETH was not going to move. So we had to wait a year for that to happen. And now it's going to go right back where it came from. It's going to go right back where we started, because the entire DeFi system, the entire hedge fund system, and the entire NFT universe just needs to get liquidated. Now, just in case you're wondering about what happened with NFTs, well, it's pretty simple, right? People staked their ETH. They got this staked ETH receipt, or IOU, but it was a token, which of course you could then deposit somewhere, because after all, staked ETH and ETH could never depeg. So you could stake your ETH, get monopoly money, okay, borrow against your monopoly money. So you're earning interest on your staked ETH. You take your monopoly money, you borrow ETH against that, and then what do you do with it? Well, you chase NFTs. And then if NFTs blow up and you can't pay back your loan on your ST ETH, the people you borrowed against, right? The people who are holding your ST ETH as collateral, they have to liquidate the ST ETH, right? So you borrowed against monopoly money. The monopoly money gets liquidated, and the monopoly money depegs from ETH. Simple as that, right? Everywhere I'm going, I'm like, oh, you know, monopoly ETH and ETH are the same thing. No, they're not. No, they're not. Therefore, there should maintain the relationship. Oh, yeah, okay. Yeah, the guys at Luna said the same thing. You know, don't worry, bro. Stand by. You know, stand fast, lads. We're adding capital. Don't go anywhere. They said the same thing in 29. The point is, how does ETH get to 368? Well, because the staked ETH thing blows sky high. And hedgers and liquidators and the whole thing just goes. There's nothing wrong with ETH. It just has to find a different price level. The same thing with Bitcoin. Okay, so you have a staked ETH blow up. That's at least one thing we know that's out there. We just don't know how bad it is. And then, you know, you've got all these Bitcoin characters. Now, if there's any good news in ETH, if there's good news in ETH, right? So we're comparing ETH to ARKK, which is Web3. We're comparing the levels from July of last year. So the good news is ETH held at 1020. That's like where it should be relative to what's going on with ARK. Okay. So, ETH's got some trouble with staked ETH, but ETH is not the problem necessarily. Of course, now if ARK continues to go lower and ARK goes down 20%, the math on ETH will change. So I'm sparing you the whole grid explanation. Go back and watch prior streams if you want the explanation of the numbers. But if you compare Web 2 to Web 3, ETH is okay at 1020. If ETH is below 1020, there's a problem. That's the staked ETH thing. That's how I'm using this 1020 level. Now, of course, there's also the idea that ARK, which is already down a lot, it's already back where it was in March of 2020. That's how bad ARK has been hammered. Okay. So if ARK starts to give out, or you have a liquidation problem with Cathie Wood, right? Cathie Wood 3 months ago was the most arrogant person in financial markets in terms of how much she thought, FOMO and hype could pump up investments and have that be an investment thesis. Cathie Wood, I think, in terms of arrogance, is now probably in like 6th place. So if ETH holds, great. If ETH doesn't hold 1020, that's how you know there's a problem with either the peg or somebody liquidated. And of course, the ETH level could go lower if stocks blow up, which they're going to. Now, even if stocks don't blow up, look at the Bitcoin numbers. Michael Saylor, right? MicroStrategy last year in July was at 472. It's now at 159, down 66%, right? More biblical number of the beast, scary stuff. Bitcoin last year in July was 29K. And if Bitcoin does what MicroStrategy has done, Bitcoin should be at 17,600. Now, what is Michael Saylor's problem? Well, he could be leveraged and he could get liquidated, right? They reported Bitcoin as cash and it's not. It's leveraged. So they've got a pain point somewhere on the leverage front. And then there's just old-fashioned finance, right? As MicroStrategy, as Bitcoin goes down, MicroStrategy stock goes down. If Bitcoin goes down and they don't sell, credit agencies are going to start downgrading MicroStrategy's debt, and it's going to impact MicroStrategy's ability to borrow money. Not to mention the fact, who wants to do business with an enterprise software company that's going to blow up because their CEO bought a bunch of crypto? Like, oh yeah, we want to buy software from you, right? Software is like changing software is like moving in divorce. It's like to change the software for your company is epic. You're going to be a CTO somewhere and you're going to say, you know what? We should buy MicroStrategy software. Don't they have a Bitcoin problem? Yeah, don't worry about it. We'll just spend 6 months integrating the software and then the company will blow up. No big deal. Oh, please. Right? It affects the computer company's ability to do business. It's not 3 Hours Capital. 3 Hours Capital blows up, wrecks the market. The guys go to, the SEC gets the top guys. That's it. This thing with Saylor is different. And of course, there's also Musk, right? Don't forget that. We'll get into that in a minute. Okay, now, this is risky, but I got to bring it up, okay? So Cardano, right? This is like, you got to be careful of the biggest of the big and the best of the best. Cardano had the biggest booth at Consensus. It was really kind of nice. And it was packed. It was packed. So Cardano's got some buzz, right? But Cardano's also got a lot of retail longs, okay? Cardano was originally picked up by our AI at 10 cents, right? At 10 cents. So if you want to buy Cardano, which I actually do, I think if there's a layer one that actually does well coming out of this other than ETH, it actually could be Cardano. Because if everything vaporizes and everything on all these layer ones pretty much comes to a halt, it becomes a race. as to whether ETH, Cardano, or Polkadot can emerge as the next big thing. It's as simple as that. So 10 cents was where Cardano started, and I'll leave it at that. You got to know where your coin started. Let's talk about gold. Okay. You know, inflation's high. Gold should go up when inflation's high. But I'm really not sure how much higher they can take interest rates. And the dollar seems temporarily overbought. So this is the gold to oil ratio. And I'm really interested in this because if the stock market's going to blow up, if crypto's going to blow up, if junk bonds are going to blow up, and gold has done nothing, it has done nothing, right? So is there a contrarian trade out there? Like oil's probably going up, but can gold moon? Could gold go from 1,800 to 2,800 like that? I don't know. If you look at the ratio between gold and oil, right? Oil has done so well and gold has done nothing that this ratio has gone down. Well, if gold starts to do better or it starts to go up faster than oil, you know, there's a technical case. Bullish divergences, stochastics not making new lows when the ratio makes new lows. Gold could go up. All right. And that's the market update. Now, switching back to news. Okay. Here we go. All right. This is what I'm talking about. This comes in from my guys as I'm talking. Musk, Tesla, SpaceX are sued for alleged Dogecoin pyramid scheme. Okay. Musk and SpaceX and Tesla were sued for $258 billion, claiming that they are part of a racketeering scheme to back the Doge cryptocurrency. You mean people could get liquidated and you could have men behaving badly? That is exactly what you had in 2001, right? It was, an internet stock blow up, but it was accelerated by Enron, which was massive leverage and phantom accounting, like 3 Arrows Capital. You had massive accounting fraud at a place called WorldCom. And then regrettably, you had a geopolitical event in 9/11. So you can have leverage liquidation, internet stocks. You can have men behaving badly. And then you can have the real black swan, which is the geopolitical event. So Elon is super cool, right? And I wish I was as cool as him. But that doesn't mean he can't get liquidated or his stock can't lose half its value like that. Seriously. Okay. So let's try the 1929 book. Let's try a fireside chat with your friendly neighborhood market update host. All right. So page 95. Wall Street seemed to see the reality of things. No immediate explanation of the break in the market was forthcoming. The Federal Reserve had long been quiet. Okay. Thursday, October 24th is the first of the days which history, such as it is on the subject, identifies with the panic of 1929. So it started on a Thursday. Measured by disorder, fright, and confusion, it deserves to be so regarded. That day, 12 million shares changed hands, many of them at prices which shattered the hopes and dreams of those who own them. In other words, if you're in crypto and you got involved in crypto because you wanted to make money or you needed to make money, and you were a late stage bull, that's okay, because people in 29 were buying stocks, right, with dreams and hopes. Of all the mysteries of the stock exchange, there is none so impenetrable as why there should be a buyer for everyone who seeks to sell, right? In other words, liquidity is not a good assumption. If you need to sell, you're assuming that there will be someone to sell to. October 24th, 1929 showed that what is mysterious is not inevitable. In other words, again, the market doesn't have to work. Prices don't have to be orderly. Price movements don't have to be orderly. Often, there were no buyers, and only after wide vertical declines could anyone be induced to bid. Now, the panic did not last all day. It was a phenomenon of the morning hours, just like today. Okay? So, a slight digression, right? Mr. Winston Churchill had come to America in 1925, right? And he returned to Britain and put them on the gold standard. Okay? Meanwhile, he introduced someone at the Fed for easier money, which caused credit to be eased at a fatal time, right? Which in this academy view, in turn, caused the boom. Now, Winston Churchill, right, after doing something 5 years earlier to encourage us to print money and create speculation, now Churchill, it could be imagined, was viewing his awful handiwork. So Ben Bernanke, right, Janet Yellen, if you're out there and you're listening to this, how's it going, right? How's it going after creating a bubble that's going to blow up the system? Okay. Then on Thursday, back to the start of the crash, right? At 12 o'clock, reporters learned that there was a meeting convening at 23 Wall Street at the offices of JP Morgan. Okay. A decision was quickly reached to pool resources to support the market. So who's going to do that in crypto? Nobody. You know, who's got the resources to come in and say, I'll take all the world's crypto? Maybe there's somebody out there. Maybe that person comes in and the market goes up. Okay. In what Frederick Lewis later called one of the most remarkable understatements of all time, he told the newspaper man that there has been a little distressed selling at the stock exchange. Yeah, we might have a little bit of a problem going on, right? Word had already reached the Florida exchange that the bankers were meeting, and the news ticker had spread the magic world afield. Prices firmed at once and started to rise, right? That's everything is okay. Don't worry, lads. We're adding capital. Everything is going to be okay. Still, in its own way, the recovery on Black Thursday was as remarkable as the selling that made it so black. So, you know, it went down, but it came back. It felt supported. Okay, so a little color on how much it moved, right? And then that's followed by a statement that said, many had good reason to be grateful for the financial leaders at Wall Street. So they came in, right? And they tried to provide psychological support to the market. How do you think that turned out? Well, it got so bad that a Boston investment trust took out an ad in the Wall Street Journal to say, steady, everyone. STEADY in big letters. You know, these texts, these tweets, steady lads, right? Tron and Luna. Steady, everybody. Calm thinking is in order. Heed the words of America's greatest bankers. Don't worry. Everything's going to be fine. A single dissonant note throughout the great portend went unnoticed, right? Speaking in Poughkeepsie, Governor Franklin Delano Roosevelt criticized the fever of speculation. This is the guy that eventually had to save the economy 4 years later. On Sunday, after Black Thursday, there were sermons suggesting that a certain measure of divine retribution had been visited on the Republic and that had not been entirely unmerited. In other words, men behaving badly may be getting what they deserve. People had lost sight of spiritual values in their single-minded pursuit of riches. Now they had their lesson. Monday, October 28th was the first day which this process of climax ad infinitum began to reveal itself. Volume was huge, although below previous Thursday, but the losses were far more severe. The Times Industrials were down 49 points for the day. Okay. Indeed, the decline on this one day was greater than that of all the preceding weeks of panic. So it started Thursday, and the decline on the following Monday was bigger than the entire down move to date. Once again, a late ticker left everyone in ignorance of what was happening. In other words, back then, I call equities the tape, right? It literally was. It was tape. You read it. Prices were falling, and no one knew where the market was. Now, we kind of know where the market is now, obviously, but do we really? Right? Can it trade at different prices in different places on the way down? On this day, there was no recovery. On the evening of the 28th, no one any longer could feel secure in the knowledge that the most powerful banks stood ready to prevent a recurrence of panic. The market had reasserted itself as an impersonal force beyond the power of any person to control it. That's what crypto is, right? There is no banker to give you a one-day break in crypto. There isn't. Okay? And while this is the way the markets are supposed to be, it was horrible. But no one assailed the bankers for letting the people down. Okay? No one. And then Tuesday, October 29th, was the most devastating day in the history of the New York stock market. To clear the trades, once again, the lights blazed all night. Members of the exchange, their employees, the employees of the stock exchange by now were reaching the breaking point from strain and fatigue. In the conditions they faced, the task of recording and handling the greatest volume of transactions ever. All of this was without the previous certainty that things might get better. So they had to work knowing it would get worse. They might go on getting worse. In one house, an employee fainted from exhaustion, was revived, and put back to work. Now, why am I telling you that story? Because that's how strenuous the crash was on liquidity. Because liquidity is buyers have to match with sellers, and then the transactions back then, they had to be matched up and cleared. So liquidity was so hard to get that the process of actually the exchanges working resulted in people passing out. The modern day equivalent, just exchange is going down, right? The equivalent of a clerk fainting in 1929 is trading software that doesn't work. It's overwhelmed by something it's never seen before. In the first week, the slaughter had been of the innocents. During the second week, there was some evidence that it was the well-to-do and the wealthy who were being subjected to a leveling process comparable in magnitude and suddenness to that presided over a decade before Lenin. In other words, rich people got taken out to the woodshed as if it were some sort of revolution. It was wealth confiscation. I'm sorry, let's put it this way. It was wealth destruction that might as well have been wealth confiscation. The size of the blocks of stocks which were offered suggested that big sellers, big speculators were selling or being sold. Another indication came from the boardrooms. A week before, they were crowded. Now they were nearly empty. Those now in trouble had facilities for suffering in private. Okay? In other words, there was no place to hide. The weekend brought one piece of bad news. The announcement on Saturday that the failure of $20 million Fauché Enterprises, which owned utilities in 12 states, Canada, Mexico, and Central America, along with hotels, flour mills, banks, and manufacturing, along with retail establishments, had gone under. Panic then sets in, right? Ford Motor Company emphasized similar convictions by announcing a general reduction in prices. So once the stock market moved, everybody was like, oh my God, and had to cut prices. All right. And then there's one final note here, just one final note in the aftermath. In the week or so following Black Thursday, the London Penny Press told delightedly of the scenes in downtown New York, right? The American correspondent for The Economist, which is still around, wrote an indignant column for his paper protesting against this picture of imaginary carnage. Okay? In other words, people were unfortunately rumored to be hurting themselves after the losses. Now, the book goes on to dispel those myths that actually the true despair in the statistics was years later. But it's funny how the market went from everything is okay, the event, and then basically made up disaster stories. Instead of telling you the truth in the beginning, they made up some sensationalized story to distract you after it was over. So how are all these big, rich characters going to survive this event? Because again, folks, I'm not making this up. This really happened. And this is happening right now in crypto, right? All the way down to, you know, the days between the events being divisible by an important Gann number of 7. The fact that the number of days is evenly divisible by 7 confirms in my mind that we're looking at the same event 92 years later. Is it crazy? No, it's not crazy, because there's a whole book about it. All right, let's see what we get in the chat. Okay. Bring back the horse and buggy. Okay. Video is buffering. Hopefully I'm still here. All right, let's check the market and see what's going on. So this is like, we do this like this is the market update within the market update. Okay, so here's poor Elon going, what? You know, like nobody wants to say anything negative about this guy. I don't want to say anything negative about this guy. I think he's cool. But that doesn't mean he's made good financial decisions. Okay, so we're looking at ETH. ETH is still down 10%. ETH has tried to get above this level multiple times at 1128 and is failing. Okay, if we go to the DeMark work, right, we're now on a 60-minute chart. So here's the 9 bottom, right, 1 through 9, and in a trend, you'll get counter trend rallies. Okay, so like here, okay, up in the top corner, here was the 9 bottom, right? Here was 2 hours of vertical, like Bitcoin goes from 22.6 to 24.2 in 2 hours. And then one last failed rally, and then boom, straight down, right? So 1 through 9, people getting liquidated. Okay, there's your failed rally. There's your failed rally. And then, right, you got probably 9 to 13 more hours before this leg on Black Thursday is done. So remember, when the crash started, it actually went down, but they tried to hold it up, which is what they're doing now. They're trying to hold it up. And what happens when they give it up? Okay, so ETH's down 10% below its key level. Okay, Bitcoin is down 7%. And of note, okay, so yesterday I kind of made this big deal about Coinbase at 50. And then I was like, oh man, did I just make the same mistake? Did I just make the same? Did I make the 1929 mistake in thinking that there was support at 50? Well, there is support at 50, but if Coinbase doesn't hold 50, where is it going to go? Right? This is the question we got to start asking ourselves, right? I mean, look at this. Look at Stonks. Like, how does this look? This could wind up being like limit down today, you know? And if they bring it back up, they're going to meet sellers. But I mean, this is like no uptick. This is like stocks are going down only. So if stocks go down only, man, like what happens, right? Carlo notes that down 85% is 10K. We always do that. Nothing new. Well said. When we do a blow up in crypto, we do a blow up in crypto, right? Is GMT overshorted? Well, maybe, but the thing about GMT is, again, like all these other coins, that alligator moving average is just starting to open up again, right? Right as the Williams oscillator was at 0 yesterday and actually probably tried to go positive for a very brief moment. And of course, they squeeze everyone out and then boom, right? Right? Okay. Let's take a look at XDeFi. I give people some navigation. Okay, so don't have that here. Okay, so Kingsley's asking, what do you think about SOL accumulation during the bear market, right? I've been looking to buy under 10. FTX loves Solana, so FTX liquidation hurts DeFi pillars like Celsius, and then they turn around and buy Solana. Okay, maybe, right? You know, when it comes to Solana, I think the sad but true fact of the matter is venture capitalists own Solana, right? They own it. They bought it at 30 cents. And they're trading at $30, right? And if I'm calculating that correctly, that's 100x. So if you got 100x in Solana at 30, right? And these Williams moving averages, which to be honest, they have not moved, they have not rolled over yet, right? They're trying to, but it hasn't gotten there yet. So that's some good news for Solana, right? But the ultimate downside target in Solana is probably 21. So, you know, your risk is that Solana goes above 33. But the downside target could be 21 if this market can't recover, which, I don't see how it can. Okay, because, I mean, when you read the 1929 book, right, I mean, how many everything is going to be okay things did we see in the last 2 days? You know, the Tron guy is like, steady lads, we're adding capital, everything's going to be okay. And then eventually people realize that this is not going to be okay. So you got these incredible wicks, right? And things like Algorand. See if I can find one that doesn't have the wick. Okay, so this is Algorand. Here's the hidden pivot work. Okay, so with Algorand, depending on how you draw this, depends on how you draw it. Okay, so the resistance in Algorand, which now matters, is 30 cents. Okay, so I think what you got to do with this market and these altcoins, like look at this Williams oscillator on the 89-minute chart of Algorand, right? This is how you like break this down. So you say to yourself, all right, I look at the market, it's down 10%, I can't get short, right? Wrong. Because it's literally sitting just below resistance or on resistance. Now, 30 cents is an even number. I get it. But if it doesn't hold, you know, you could be looking at 27 cents or 20 cents. Right? And that's kind of being charitable with the draw. So I'm not trying to hate on this, but I know guys sold it at $1. They wouldn't stop selling it at $1. They wouldn't even let it get there. And it was 50 cents. Now it's 30 cents. Right? So this might hold. Right? Fantom is still holding 23 cents. So that's a bit of hope. Right? You know, this is the hidden pivot work in Fantom. But again, you know, Williams Oscillator. Williams Oscillator at that inflection point, and we got to see if Fantom holds 23 cents. It actually could be a big deal. Like this might be the barometer for the whole thing. Believe it or not, right? Like if Fantom doesn't break, maybe the market tries to recover. But if Fantom breaks, man, it's just going to go. And of course, the market doesn't make it easy. That's the other thing about this, right? Like 1929 was just kind of like, it kind of gave out. But crypto goes down and then it just sits there, right? So you got that reprieve on that first Thursday. What's a reprieve look like? Well, a relief rally. That was yesterday, right? Today, the reprieve may be that it bounces at the end of the day, right? Or there might be a bounce. But again, if this is 29, it starts Thursday and then it just keeps accelerating week after week. Right? Okay, Hiram says, Bill, in a few words, are you saying sell everything and wait? If we have liquidations, fraud, etc., and no advice, what would be the best advice? Well, folks, not investment advice, but I'm telling you that the clock is running on this market, right? Like whatever rally, whatever upside, whatever stability there is, I think we're on the clock. We're on a clock. As simple as that, right? You got to find resistance and get out of positions against that. Or, you know, who knows? If this is like Thursday, 1929, somebody says we're going to support the crypto market and it goes ripping back up. That's the last rally because that's what happened way back when. So if you get a rally, right, you got to ask yourself, if you could buy the best cryptos in the world for $10, $20, 20 cents, I mean, how much money would it take to get a huge bag going? So should you get out? Well, I can't give you investment advice, but I've been screaming for over 2 months that if you don't get out when this thing starts, you know, the market update will just put the chart up and we'll just watch it go. I got to get everybody out before that. So the question is, if you're asking me if you have to preserve capital, then you have already answered your question. If you have to preserve capital, you have to take tax losses, call your accountant, do your math. You want to hold on to stuff, hold on to it. Some of it, right? You don't want to be all the way out of the market because you never know if it could turn around and go up. But, you know, you don't want to be. Now, someone's asking, is USDC a safe haven to chill? Nothing is safe. The only thing I think in this round that might go up is gold or oil. But in an environment like this, nothing is safe. All it takes is one government regulator on the tape to say something negative about stablecoins for that whole space to come unglued. So with stablecoins, you have tape risk. Right? You have tape risk. Somebody could come on and say, you know what? We're done with this. Okay. So closing out the stream. Okay. Midday, roughly 2 in the afternoon, Central Time, June 16th. ETH, you know, resistance 1129. Bitcoin, key GAN level 22,500. ETH, key GAN level 1170. So the fact that ETH is not upticking, cannot uptick after falling back below 1170, see these dances around these GAN levels. Okay. This is not funny anymore. I think you got 48 to 72 hours to make a decision as to whether or not you're going to get out of this thing or not. Because if you haven't made the decision when it goes, you will not be able to get out. Or the prices that you will get out at will be shocking, or worse yet, you'll freeze and give up. That's the worst thing that can happen, right? You don't want to be deer in the headlights. You don't want to be like the guys in the book, right? Instead of sitting in the corporate boardroom, they had places where they could go suffer in silence, right? You don't want to be that person, especially if you're listening to this broadcast. Feel free to tweet this broadcast out, right? Normally, I don't say that, right? I want you to subscribe. I want you to like it. If you don't want to read the book, then share the broadcast of the excerpts from the book with your friends, okay? Because we're all brothers and sisters in crypto. We are. When I started in crypto, that's the way it was. It didn't matter what you looked like. It didn't matter what your age was. It didn't matter about race, creed, color, identity, none of that. We were all brothers and sisters in crypto, and we still are. Now, the best way to help you in crypto is get you out of the way of a shockwave, okay? A shockwave created by over leverage, men behaving badly, whatever. Who cares what caused it? It has nothing to do with the long-term value proposition of crypto. And you have to separate that in your head, right? Crypto is great long-term, but that doesn't mean the market can't just wreak havoc on the value of your portfolio. So adjusting your risk levels is not the same thing as giving up on crypto. It's not. That's what happened in 2018. People were like, oh, love your research. Can't give up on crypto. Didn't want to give up. And then just wiped out, right? And that crash wasn't 1929. That was more like a bear trend. It's like down, all the way up, down, all the way up. This could go straight down. All right. So you want to live to fight another day. So you're like, Bill, is there anything good? Yeah, there is something good. You got to believe in yourself, and you got to start reorganizing your mind to say, all right, I'm done worrying about this. I'm done worrying because I'm going to make the adjustments. And then I'm going to start thinking about what do I want to grab when it's over, right? So it could accelerate like after Father's Day. It could accelerate on Father's Day. You got to know that anybody who's going to be liquidated or has to liquidate the person who is going to get liquidated is going to confer over the weekend, and they're going to make these decisions by Monday morning. That's equities, bonds, and crypto. So just like in the book where they had these meetings of the minds, those minds are now meeting as we speak. And the market awaits the decision or lack of a decision. Either way, the market is going to have to handle the men behaving badly. And that's the market update for this Thursday, June 16th. I will be here tomorrow. Tell your friends, subscribe to the channel, and please hit the like button. We'll see you tomorrow.